my window.
Hello traders, Gary Wagner here. It is approximately 10:30 a.m. in Honolulu, Hawaii, Thursday the 30th day of June, and this is the daily report for gold. We have gold trading moderately lower today, down around $11, but it is trading right at that psychological $1,500 per ounce. As we currently look at the marketplace itself, as you can see, I'm going to start with our half-day charts here. This is a 720-minute chart, upper left daily chart, and then two weekly charts on the right. The one thing that we've been talking about is the potential for a correction within the marketplace itself, and the fact that we're probably going to be entering into a corrective phase. So today what I wanted to spend a moment talking about is current wave count, as well as potential areas where in fact we could see the market retrace if in fact we're correct and the market does begin a corrective phase. On the left hand side, what you can see here, these are a 720-minute chart, so 2 candles per day. It's a half a day chart. We're looking at the marketplace, and let me just bring you up to date. When we take a look at this particular move here, this is the corrective wave 4. That is represented in this particular part of our half-day chart. From there, we go into wave 5, as you can see right here, wave 5. And wave 5, it turns out, was composed of a 3 count on that particular wave. 1, 2, and 3, which took us to that top around 57, I believe. Then from there, it's my belief that we are now entering corrective phase and corrective wave A, which is this particular wave right now. Typically on a corrective phase, you're going to get a 3 or a 5 count. I believe that what we have seen is our 1 and our 2. We are currently going into our third portion in terms of the minor count within that. Now, where could that in fact possibly go? And to do that, I really want to move over to our weekly chart. And there are key areas that I want to talk about. This on the upper hand, on the upper right, is our weekly chart. And you notice that I have put in basically 2 Fibonacci retracement areas. The first is what I'll call our deep retracement, and that's going from 1158. As you can see, that it starts back in 2010 and goes all the way up to our record top, 1577. Our second is a shallower. It begins after the January correction right at here. It should be about 1308. I'm going to correct that in a second, and of course goes to that top. Now, as I've talked about before, we look for certain levels that we call Fibonacci harmonics. These are areas where 2 different time frames will match up, and I've kind of highlighted it in red. You can see that this to me is a fairly critical area, 1476. 1476 is not only the 23% retracement here of our deep Fibonacci, it is also a 38% retracement of the more shallow. So those match up. That's a Fibonacci harmonic. There's nothing else that comes into play until this particular area right here. So our 38% retracement of our deep Fibonacci is at 1414, and the 61% of the shallow is at 1414. So that to me could be a critical area. And just also to point out to you, when you look at where this particular low came, which is that 1308, you notice that it is a 61% retracement of this large move all the way up here. But it does match up. So the most likely areas to watch, not necessarily do I think they're going to, but my sense would tell me if we are going to see any kind of sizable correction, 1475, that's going to be an area we should find support. And then 1414, that's really the deep area. That's 38% and 61% collectively. And lastly, traders, I want to take a final look at the daily chart. We looked at this yesterday. Now, we were talking about a Fibonacci level and sequence. That is what I call the shallow sequence in the last weekly chart. This is on our daily chart, and as you can see, this is going to go from 1308 to 1577. So this is our correct number, not 1514, but 1513. And I talked about the fact that that should provide some resistance. We have seen it become resistance. We haven't seen it be support. As you can see right in here, it's absolutely support. Right in here, you can see that it was resistance. Of course, it breaks through here, forms a base, moves up, and then here. And when it broke through here, as you can see, as the market came back up, we came down, we tested that low. As the market came back up, it did close right here, opened again, of course, continuous on a Forex, and I think you can see quite clearly that at least on a tentative basis, this does appear to have some real resistance in this area, and therefore it does seem logical that what we might witness now is going to be, in terms of our correction, that ABC. This is going to be A. We're still in A. We'll either get a 3 count or we could get a 5 count within a corrective phase A wave. This has been Gary Wagner wishing you, as always, good trading, and we'll talk to you tomorrow for another daily report and the weekend wrap-up. Bye-bye.
Many sights to see, and when I look in my window, so many different people to be, that it's strange